is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Marchant with Investor Connect. Today we're here with Andrew Byrnes, founder and principal of Byrnes Impact. Andrew brings more than 25 years of experience working at the intersection of innovation, business, law, government relations, public policy, and strategic communications. Over the course of his career, he has advised innovative companies, served in senior roles in the U.S. federal government, and has been a venture investor with a focus on emerging technologies, AI, and deep tech. Andrew, thank you for joining us.
It's great to be here. I'm looking forward to the conversation. I have to say the timing to talk about investing in AI couldn't be better. I think the playbook's being rewritten almost on a daily basis.
Absolutely. So where are you calling from today?
I'm here in Silicon Valley in the San Francisco Bay Area.
Great. Well, let's just jump right into it. Let's talk about, investing in AI. You have quite a bit of experience there. And I guess my first question is, how do you distinguish between real technical substance and narrative-driven hype we see in early-stage AI companies these days?
Yeah, that's a great question. I describe my work as helping founders and CEOs who are building at the frontier and working at sort of the inflection points where success of a company demands a new way to engage with the outside world. And so how to convey the message and in a way that investors, again, can distinguish between the technical substance and the hype is critical. So I think at the early stages, you're really looking for signals as an investor that there's substance there, at least as far as the company has gone, and that it's worth diving deeper. So I think the first step is really to get a handle on the technical improvement or feature that the company is saying that they've added or that they're doing better than anyone else. And then the second, I think, is really, have they shown that it works in a real setting, even in a limited way? So a demo isn't enough in my mind, even for an early stage company. You want to make sure that, in the wild, even if it's just with one customer, one use case, that there is actual substance there. And I think you can't avoid looking at the technical depth of the team, the employees and the advisors. What roles have they held? What accomplishments have they had in the specific tech at issue? And then finally, I think it's important to really be clear about or demand that the company and the founders are clear about the tech, even to a lay audience. I mean, I started my career of 16 years as an IP litigator here in Silicon Valley, and translating technical concepts to plain English was basically what I did every day. And I'm not at all convinced that technologists should get a pass on clarity of explanation to lay audiences. So I think that's a real tell in distinguishing between the hype and real substance.
Well, that's a good point. I often hear startups pitch their AI startup, and from start to finish, it's all about AI. And at the end, I say, hey, that's great. So what do you do? I mean, it's not clear what their core competency is. How do you estimate that?
Yeah. Well, I think understanding the who, the founders, where are they from, but also it goes beyond just the technical. I mean, it's really about, do you understand the market? Do you understand the customer base and the go-to-market strategy? This notion that we can detach sort of the product from the go-to-market, I think, and this is not specific to AI companies, but you can't, and no investor should be forced into making that binary choice. So I think it's okay. I get the AI. You've said AI a lot, and there's buzzwords, but what is the problem that you are solving? Why are you well positioned to solve it? Not just from a technical problem, but being able to deliver the technology to drive adoption. So I think it's getting more granular. And honestly, if you're an investor that doesn't have a technical background, this is really where investors, even coming from a place of maybe looking at new technologies, can bring added value because they often are able and willing to ask the questions that are maybe even sometimes seen as basic, but the basic of what are you selling? Why would people care? And why would they pay for it? And how will you make money? Those are important things to ask, regardless of the level of technical proficiency of the investor or of the company.
Very good. So, how should investors think about regulation and policy, not just as sources of risk, but as forces that shape shape which AI companies are going to succeed?
Yeah, I mean, my background, as you mentioned earlier, now over 25 years working as a lawyer and public affairs advisor in government, in the private sector, and as in the law firm. This is something that sort of is my area of focus. I think there is this perception that regulation is sort of this static risk, like it's only a risk and it's there, and we sort of have to dance around this fixed issue. But it's not really, I don't think that's sort of the right way to look at it. I think, regulation isn't sort of this red light and this blocker. It can be, but more broadly, it's really a force that drives, who can operate, how fast they can scale, what margins look like. And, investors in AI, whether they realize it or not, they're sort of underwriting this regulatory risk, right? Because regulation in AI is very dynamic, and you're sort of making a bet when you invest in AI that here's how the outside world, regulatory and otherwise, will engage with this company specifically and the aspect of AI that they're working on. So they're really fundamental inputs. One thing I would definitely want to point out here is because, regulation and law is jurisdictional, meaning the US law is different than Europe and California is different than Texas, et cetera. And so there's really a structural decision that's driven by geography. So, where are you going to operate? And it's not just a where am I going to sell into, although that's part of it. It's about more broadly, like which understanding the different regulatory approaches, understanding which help you today, and then engaging to make policy almost a competitive moat. So, I work with companies often and they're building something that really hasn't been seen before. And I encourage them, now is the time when you're building to, don't just wait for the rules to develop without your participation and involvement. So I think sort of taking a seat at the table in terms of what the regulations will be to help drive that going forward, and educating policymakers and others involved about the value and importance of what you're doing, I think can really not just change the rules of the road going forward, but also gives you a visibility and credibility that can really help the company shape outcomes, as you mentioned. And investors, I think, just need to be aware of that opportunity and ask questions of founders about, what are they thinking about how regulation today and maybe tomorrow will engage with their business plan, and making, and if it requires adjustment, are they positioned to do that?
So, from your work advising technology companies on law, regulation, and public affairs, what signals tell you a startup is genuinely high potential?
Yeah. Well, I think from the investor perspective, the basics still matter. Is there a real problem? Is there a real customer willing to pay? Is there execution ability along with vision, with the founders? But I think, one key piece that, again, isn't AI specific, but I think is particularly important given the rapid pace of growth in the field, is, do the founders understand the customer? Because ultimately, the best technology devoid from adoption does not make for a successful company. So better tech is half the battle, and the other half, to my mind, is adoption. And I think you can tell that in part by the team that the company has built, including on the advisory side. Like, is this a team that, yes, they're strong in tech, which is essential, but also, do they have that go-to-market insight? Do they have that empathy for what their customer is going through, that they can actually speak to the customer, not merely as this is a technical fix, but really a broader fix for a business problem? Back on the regulatory front, I feel like AI is there's lots of regulatory conversation and development. There are some places where there's sort of an anti-regulatory approach. Some areas of the world are more pro-regulatory, but there is, in some ways, understanding and engaging around the regulatory space is a sign of sophistication among founders. And I think it's not required, but it would be a helpful signal in terms of identifying a high potential startup to have founders that understand that regulation does and may in the future matter even more to the company. And then I guess The final thing I would say on this is, there's so much activity in the space. I see data as a likely, well, if there's a moat to be had, I think data is often where that moat's going to live in AI. So not, beyond the initial model, how do we intake and use data to build this kind of, feedback loop. And I think, a startup that has generally high potential is going to have a well thought out strategy on the data side, in addition to whatever they're doing with model development or otherwise.
Yeah, that's a good point. So how do you evaluate whether a company's AI first positioning is real versus a superficial pivot?
Yeah, well, from the companies that I see emerging now, virtually all of them seem to be AI first. But when you're looking at, more legacy startups that have pivoted and relabeled themselves, I guess I'm showing my skepticism. I guess I'd look at a couple things. I mean, most fundamentally, if you strip the AI out, would the company exist, right? Would there be a point to the company? If it's a company that survived without AI and now is pivoting to AI, I think it's important to look at the company as it is today. Is AI bolted on, buzzy, marketing driven, or is it really fundamental to the entire company? So I think also you can look at what AI is used for. So, are they using AI to make, something incrementally, process incrementally faster, for example, just make sort of incremental improvements, or sort of automating a human task? Or is it something more powerful and more transformative? I think that's an important signal. Going back to the data point, I think an AI-driven company, AI-native company, will inherently have a flywheel built in that, every customer interaction improves the model, that strengthens the competitive moat from a data perspective and lowers long-term costs. I feel like data is king inside an AI-first company. And then I guess the final point I'd make on this is, is AI critical internal to the company just to, engineering, or is AI sort of baked into all the different functions? And so everybody on the team, whether they're a technologist or not, is sort of, understands how AI relates to their particular functions as well as the company's product.
Great. So for investors without a technical background, how can they effectively evaluate AI claims with confidence?
Yeah, I mean, it goes back to my comment earlier from my patent litigation days, and that was, although I did do a AI case almost 20 years ago, a neural networks case, but a lot of it was semiconductors and early internet work. But in any case, always focused on translating, technical concepts for, in those cases, judges and juries and non-technical audiences. So I'm a true believer that regardless of how technical the product is or how, deep in the technical development the founders are, that they really need to be able to explain the value proposition of the product or service without buzzwords and hand waving and concepts that you need to have a PhD to understand. I think, if you are doing technology as a business, you need to be able to convey that vision and that product in plain English. I do think that you can use AI to check AI. So I encourage, I've done this and I encourage others to really pressure test the technical claims, with an LLM, and ask the model, what are the hidden assumptions or gaps in the model? It's not a complete answer, but it does give you, particularly for someone without a technical background, it can sort of do some of that translation and at least raise questions, follow-up questions that you can ask of the founder. I think if you do have technical people in your network who can help, I would talk to them. When I do diligence on a company, I usually ask to talk to customers and other investors, and they can also help because they've bought, if they are actual customers and investors, they've bought what the company is selling, and I think it's helpful to get their perspective, whether you're whether you have a tech background or not. And then I guess the final point that I talked before, that you really can't separate product from go-to-market in terms of being able to have a successful company in AI or in any tech field. But I think you really need to be looking for, obsession with the customer than with the tech, because without that real connection with the customer base, you're not going to have a business, you're going to have a research project.
Well, so how should AI founders think about crafting that clear and credible narrative around what they're building? What are some key tips there for that?
Yeah, I think it's clarity around what you're doing, why now, why you're going to win. I think you understand audience. So the VC audience is different from the public audience, is different from potentially the consumer audience. And so the clarity and credibility may vary depending on to whom you're speaking. But I think being aware of the audience and where they're coming from is an important data point. And, one thing I've seen this over my career, when you are pushing the envelope, when you're on the frontier from a technical perspective, you're inherently disruptive, and many people, many potential audiences, it scares them, or at least they're concerned about it. So I think, communicating your mission in a way that's builds trust. And sometimes it means leaning more into that. I understand the customer and the implications of what I'm doing on the broader economy or a society, if that's in fact an outcome of the company, rather than purely focusing on sort of here's today what we're doing technically, although that's important as well. I guess the final warning I would make is, if you can't simplify in the message and make it clear and credible, someone else is going to do it for you. And that could be a competitor, could be a regulator, could be the press. And that is almost certainly not going to be as positive as your own message would be.
Well, so beyond messaging, how should founders think about engaging the broader ecosystem, the policymakers, the partners, and, other stakeholders?
Yeah, no, that's a great question. I think it's a real dangerous mistake for founders to kind of treat these other stakeholders, again, beyond the team and the customers and prospects, kind of treating them as obstacles to be avoided rather than kind of constituents to be engaged and managed. So the way I think about it is stakeholder engagement. And again, stakeholders include, as you mentioned, policymakers, partners, the public as a whole. It's kind of an insurance policy because, if you don't engage, then, and there's a crisis either specific to your company or in the industry or just questions about AI, and there are lots of questions every day on AI, it's too late after the questions arise to sort of introduce yourself, right? You want to, like in life, you want to make friends before you need them. So true for this context as well. And so I think it's important to think about engaging with policymakers and others as education initially and not direct advocacy or lobbying. It's not technically lobbying, but in any case, usually. But I think most policymakers, even if they're seen as hostile to technology or quite skeptical of it, really want to understand. I'm not saying that they don't understand, that's why they're skeptical, which sometimes is true. But it's really, if you think of yourself as a founder, educating the impact, policymakers of the impact, on their constituents, on the systems, on society of what you're doing, I think that's helpful. And again, if you don't educate them, someone else will, and it's not going to sound as good for you. I think it's also important in AI, where there's so much attention, not just from policymakers, but from civil society, standards bodies, academic labs, to understand that sort of, maybe you'd call it an indirect influencer map. And so it's not just about policymakers. There's lots of ways through industry associations and other engagement to sort of influence the conversation and be part of that education process. There's a line from politics about engagement and participation, which says, if you're not at the table, you're on the menu. And I keep that in mind in a lot of what I do. But I think for founders as well, it's, if you're not in the room, then your voice is not being heard. And for founders that are really pushing the envelope and wanting to make huge change and impact in the world, they need to consider that alongside a more traditional go-to-market, focusing on prospects and customers.
Right. Well, traction in startups varies from one sector to the next, with enterprise SaaS, it's revenue growth, with biotech is progress to FDA validation. What's the real traction or metric in AI companies, aside from just technical progress?
Yeah, well, as with other, non-AI startups, you have customers, you have revenue, are customers coming back? I mean, I think those are key metrics that you'd see in almost any startup. I think though, in the context of AI today, and that's why I said at the beginning, this is such an interesting time to be talking about this. There's a lot of sort of, I would say, almost like innovation theater, where there's demos and sort of demos and generic interest. I mean, sometimes that's what you get. Sometimes it's okay, well, there's a paid pilot and that's the thing. But I would really encourage investors to really press on that, because there's a real difference between sort of a paid pilot that lives in a silo. It's sort of one of these bolted on, we'll just try something. And even if they decide they like it, it would be difficult operationally to kind of bring it into the company and really expand the relationship. So I think, you're looking, if you ideally to see a deployment that really touches the customer's core business data, that then, what happens inside the customer is there are constituencies who start to depend on your product, and they're internal champions. So creating those internal champions through that deep integration can be helpful. Is another way to say that, is AI novelty or necessity for the company? And I think real traction really requires it to become a necessity for at least enough companies to start to build a business. Another thing, another piece to look at is, will customers pay? If not today, then soon. And will that amount be more than it costs to deliver the services? With the cost of compute these days, it's expensive to run AI companies. And so, and that's not the only cost, of course, but there are a myriad of costs. And so is there a visible path for, to profitability, which, in startups, that's always been a question, but I think in the AI space, even more acutely so. One thing that's been interesting, is in terms of the, traction, I think you can get signs of traction from friction, which may sound counterintuitive, but particularly in companies that are engaging in enterprise or governmental procurement processes, where they're doing something new and the systems in which they're trying to play, they don't fit them perfectly. They don't fit the categories, or there are processes that seem somewhat misaligned. To me, if they can get through that gauntlet into those companies or a government, I think that itself shows a tremendous amount of traction, because if it's easy to get in, then others can get in easily as well. If there are obstacles and you've succeeded to get past them, that itself, I think, shows shows a traction more clearly than when you haven't had to kind of cross that transom.
So what's your take on storytelling in fundraising? When does it help the founder raise capital, and when does it obscure the signals for investors?
Yeah, I mean, I've invested alongside the work that I've mentioned for quite some time, and clearly storytelling is essential. You're most often going to be dealing with investors who are seeing lots of decks. And so you need to have, you of course need to have something that's memorable and compelling, and really makes, regardless of the level of technical sophistication of the investor, to the extent you're looking at investors more generally and not those who are particularly focused on your narrow technology, you really need to make that complexity legible and actionable for investors. So, and I think the best storytelling approach is not simply to sort of lay out sort of what you think is your best narrative, but really anticipate, okay, what are the questions that might come up, and try to address them through the story if you possibly can. And I do think it's worth considering, are there vulnerabilities that can be part of the story that you've maybe overcome or addressed? So it does show that it takes a little bit of maybe it's a little bit vulnerable, but can but it may speak to questions or skepticisms that the audience has. Now, in terms of obscuring, so I think that sort of clarity and anticipating objections is important for effective storytelling. In terms of obscuring, I've found increasingly that buzzwords and kind of hand waving. They're always been part of lots of decks, but I think it obscures now more than ever because the tech is going so quickly. Can be difficult to fully, to fully understand what the company is doing when they're sort of distracting in that way. And so I think it's sort of this, the story of, I think there's really a need to sort of thread the needle between, telling a story that's genuine and credible enough that's not going to terrify investors who are really probing and regulators down the road and the like, but it is big enough and ambitious enough and bold enough to attract venture capital. So I think it is certainly, you're certainly trying to thread the needle there. But I think ultimately storytelling is the only way that you get your round done. And so, reading the audience and providing clarity will be critical.
Very good. Well, let's talk about the future of AI investing. How do you see investor expectations and the founder behavior evolving in AI over the next 3 to 5 years?
I mean, the next 3 to 5 years in the context of AI seems like 100 years, given when I think about where we were 3 to 5 years ago, 2021, my gosh. So, I think a lot of the easy opportunities have been taken. We're now in a hyperscaler driven situation where, I think the investment opportunities that are left really are much more focused and precise in terms of their product and positioning. You've seen a shift towards sort of the specific high value use cases, simply saying we're just going to do something that everyone's always done using AI. I don't think makes much sense from an investment perspective these days. But, candidly, the concentration of, the major LLMs does really raise the bar for differentiation because you need to be able to say, not only, okay, we're doing something targeted to a particular customer segment that we know very well, we're developing technology specific to that use case. I think investors are increasingly asking, well, couldn't I just do that? You're either doing it the company's either doing it on top of, one existing, major LLMs, or, they need to answer to the question of, well, couldn't I just by putting in the right prompts, develop a model that could do the thing that your company is doing. So I think investors are going to increasingly focus on, where's that real edge? What's that differentiation, both on the tech side and in the understanding of the market and the go-to-market strategy. And then how and why does the company win in an environment, not just today, but, highly speculative ideas and concepts of what the market's going to look like in 3 to 5 years. So I think it's a challenging time for investing in companies that really have the traction and the potential to be around and be successful in 3 to 5 years. But from my perspective, teams that understand, not just the technology, but the context, that includes the law and the policy and the stakeholder environment, they're going to have an advantage. And as I look at potential investments, that's definitely a lens through which I evaluate them.
Great. So in the last few minutes that we have here today, what else should we cover that we haven't?
Yeah, one of the questions that I had of you, Hall, if I may, is I know you work with companies that are looking for investment. And I'm wondering from your perspective, what are you seeing as companies are going to investors? What are sort of the headwinds and tailwinds, particularly in AI? And how do you see that developing in the coming years?
So the challenges I see the founders face is that the models are evolving very quickly. I remember back in the day, things would evolve every 6 months. New OS or Windows would come out. Now it's every 6 weeks. And so that's moving very fast. There's a lot of uncertainty about the systems and, the reliability, the hallucinations, how do we put guardrails around this so it doesn't embarrass us later? There's a challenge there. And then some people, it's just all AI, and I'm always looking for the core competency. What do they really have behind the scenes that anchors it. And for those who do, it's probably going to be a good business. For those who don't, it's probably a lot of hype and hope about how AI is going to save us. But we are looking at, things that will sustain over time, what competitive advantage and thin wrappers around AI models are not going to last even, months. It'll be disrupted because the model changes, and there's literally a million people doing the very same thing with it. So you have to start getting into proprietary data. You have to start getting into altering workflows and working at the infrastructure layer where you're bedded down. And so you have to start thinking about that. It is a still emerging ecosystem, despite how much money has gone into it so far or been raised for so far. You have to figure out, these things take a little bit of time to flesh out. The cloud was like that, 7-year rollout. Blockchain was like that, 7-year rollout, and AI will be the same. Although I think it is moving faster, and it will be maybe a more impressive rollout for sure. So those are some of the things I see founders are dealing with.
Yeah, I mean, and just to pick up on sort of the competitive advantage, it's a mistake for an AI company not to engage in the broader regulatory and policy discussion, because that is a huge factor for, it will drive, again, it won't dictate necessarily who wins. It could potentially, but it will certainly change the market and the landscape. And it is one where you can, again, take that seat at the table, be part of the conversation, and demonstrate, be visible and demonstrate your technology leadership, as well as, educate policymakers and the public about why what you are doing is so important. And that is its own moat in addition to the technical proficiency of the company. So I think that's something, that's why I get calls these days from AI companies. And I've seen that work as a good strategy alongside, of course, exceptional product development and performing high performance in other aspects of the business as well.
Great. Well, it's been a great discussion today. How best for listeners to get back in touch with you?
Absolutely. Well, thank you. I've really enjoyed the time here. So I'm Andrew Byrnes. My consultancy is Byrnes Impact. So byrnesimpact.com. That's BYRNESIMPACT.com. And I would love to chat with anyone who is thinking about these issues and how they can, either as an investor, use these in diligence, or as a company, use these to accelerate their growth.
Great. I want to thank you for joining us today and sharing such great information, and hope to have you back for a follow-up soon.
Great. Thank you very much, Hall.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.